But let's get a couple of basic numbers out first. What kind of loan growth are you looking at for the coming year? That's FY24. And also, I recall when you joined the last time around, you said NIMs will stay at these levels. In fact, I think you had given a number of around 3.2, 3.3%, but you have even outdone that. What is the number you're looking at maintaining for FY24?
Yeah, good morning. Thanks for having me. First, let me talk about the expected growth in the advances book for the coming year. I expect the GDP growth to be anywhere between 6 to 6.5%. So given that we would like to target at least 2 times our GDP growth, I'm looking at 12 to 13% kind of growth in the asset numbers for the coming year. So we are currently at about 72,000 crores. Our endeavor is to reach at least 82,000 crores the coming year. This is as far as advance is concerned. As far as NIM is concerned, I gave a guidance of 3.2 for the full year. We ended with 3.3. And the good news is that for the quarter Q4, our NIM is at about 3.6%. So I expect the NIMs to be, if it can hold for the coming year, I would expect the overall NIM to be at around 3.5% for the full year. I expect that the liquidity situation is going to be a little bit constrained for the couple of quarters, and therefore we need to be watchful on the NIM.
All right. Just one more question, sir. For the past quarter, I'm looking at your gold book. That's growing quite well as well. And the yields obviously will be relatively better out there. Retail gold as a percentage of your total book is much higher. What kind of yields are you enjoying on this gold book, retail gold book? And if you could tell us as well, as a percentage of your total book, where do you see this number stabilizing at?
Yeah, first let me answer the second part. Currently, my gold book is at about 19% of my asset book. And frankly, we are not chasing gold as a specific business to be targeted. We are actually looking at good quality business across, and gold being a product where there is no capital requirement and only ops risk is there. Therefore, we like that product. In that respect, I would expect it to be somewhere around 20-21% of my overall book. That's the kind of growth I'll be happy with. As far as the rate of gold is concerned, as you know, this is a market which continuously, there's a huge competition both from NBFCs as well as banks. So we constantly keep revising our rates. So we ensure that we are not too low, we are not too high either. So it's been pretty much holding for us. Since it's a branch-driven product, given our distribution strength of more than 920 branches across the country, this is really proving to be good for us.
Okay. Mr. Ramakrishnan, good morning.
Good morning.
So, your earnings presentation has highlights of what has been achieved under your leadership at the bank, October 2020 to March 2023. And, the improvement is very, very commendable, which then logically gets us to the question of what happens after you leave, because you've chosen to not lead the bank anymore post-September this year. Could you tell us what's been the internal sort of discussions around that at the bank, successor discussions? That would help. Go on.
Yeah, thank you. First, let me talk about the performance of the bank. Obviously, has come about because of the strategy which we have put in place right from the time I took charges from October to 2020 onwards. And it's been based on, if you recall, it's been based on 6C strategy which we articulated: capital adequacy, CASA, cost income ratio, compliance, credit, competency building. So in all these parameters, I think we have made a substantial progress. And this has obviously happened because of the huge transformation which has happened in the entire bank. So we have created lots of new divisions within the bank. We have created a very different kind of profitable-oriented culture. We have brought in lots of changes in the HR, in the way we evaluate.
And that has been well recognized. I mean, you only have to look at the stock price, which is done well under your tenure. But the question for investors is what happens next? So who's the successor going to be?
I'm coming there. So some of these changes which I'm articulating are not something which is going to go away. Therefore, clearly, this will be built on by my successor. Therefore, these are all things to stay. And the way we have also structured our asset products are basically verticals with a very clear targets given for each year, and with a clear profitability targets for them, with a clear NIM target. So with all this, there is a very clear focused effort in building business in with a high quality underlying assets. So in my view, this is something which is going to stay. and definitely it will get built by my successor. This is as far as the stability of our earnings and further growth of the bank's parameters are concerned. As far as my successor is...
Yes,
Sorry.
please go on. Please go on.
Yeah. With regard to my successor, as I said earlier, we have given a mandate to Hunt Partners for identifying our successor. So we already had a couple of rounds of discussion with the prospective candidates, and we'll soon be coming out with the name who is going to succeed me. And as you know, we need to give the names to regulators at least 4 months in advance. So we are pretty much in line with that expectation.
Okay, so we'll watch out for fresh developments on that front and the name there. Mr. Ramakrishnan, just want to talk to you a little bit about asset quality and sort of what lies ahead, given that the market is now picking up, the chatter around ECL. It's still not a final sort of rule from the Reserve Bank of India, but we're probably getting there. Now, on asset quality, there's a very small increase. It's a small increase, but a quarter-on-quarter increase in your slippages. The good thing is that the restructured book has come down year on year. So give us more understanding and color on this. Let's say in FY24, as a percentage of total, your restructured will come down to what level? I mean, 5% of the total loan book or 7%, 8%, whatever that number might be. And also, what is the general guidance on asset quality and how the bank is looking at the whole transition towards the ECL provisioning model?
Yeah, first let me talk about the slippages. We actually started the year with about 2,400 crores of restructured assets, and I gave a guidance of 25% slippages to happen from restructured assets. I'm happy to say that it's pretty much in line with that. And as we talk, my restructured book is at about 1,516 crores. And we continue to maintain that probably we'll have 1/4 of that slipping into NPA in the coming year. And the new book which we had created from October 20, which is about 46,000 crores, it has a very, very negligible slippage. My gross NPA there is 0.09%, and SMA2 is also a very, very low number. Therefore, we expect the overall slippages for the full year not to go definitely beyond 1,500 crores. That itself probably would be a little on the higher side. But for this year, we ended the year with about 1,416 crores of slippages. We expect the next year to be pretty much around that same level. So as far as the gross NPA is concerned, we are currently at about 5.2. I would probably give a guidance of 4.5 for the end of the year. And net NPA currently it's at about 1.8%. Probably we'll be targeting to come below 1.5% for the coming year. So this as far as the gross and net NPA is concerned. We are parallelly working out the impact of ECL, etc. But given the fact that we have churned most of the portfolio, we don't really it impacting much in our book. So we'll, of course, be carefully monitoring this. Thank you.
All right, Mr. Ramakrishnan, very quickly, by June, we should hear who is going to take over from you, right? Because 4 months in advance.
Absolutely, yes.
It's been a good chat with you this morning, Mr. Ramakrishnan, and congratulations on a good set. We wish you well, and we look forward to speaking to your successor as well.